Good day. I'm Jacqueline Aquino and I'm going to discuss the risks of e-banking. What is the meaning of electronic banking? Electronic banking is a form of banking in which funds are transferred through an exchange of electronic signals rather than through an exchange of cash, checks, or other types of paper documents. Transfer of funds occur between financial institutions such as banks and credit unions. They also occur between financial institutions and commercial institutions such as stores. Whenever someone withdraws cash from an automated teller machine or the ATM or pays for groceries using a debit card, the funds are transferred via electronic banking. Electronic banking, known as the Electronic Fund Transfer or the EFT, refers to the transfer of funds from one account to another through electronic methods. Here are the risks of e-banking in detail. First is the operational risk. Operational risk is the risk of loss resulting from system or internal processes, people and system, or external event. Operational risk can trigger huge losses. It includes incorrect transaction processing, compromises in the integrity of data, data privacy and confidentiality, unauthorized access to the bank system, and enforceability of contracts. Some hackers steal customer information and money from the bank and blackmail the institution for additional money. Pag nagkamali ka sa mga data or information ng customer, malaking problema yan sa isang transaction. Example is when a teller accidentally gives an extra 50,000 bill to a customer. O di ba malaking bawas na yon or loss na yon sa bangko that can affect due to human error include internal fraud or mistake during transaction. Apart from technological errors, human factors like negligence, customers or employees, employee frauds, hackers are a potential source of operational risk of e-banking. Next is security risk. When you talk about banking transaction, security of transaction is of paramount importance. All customers want the transaction to be confidential. However, since all the information is online, there is always a chance that someone might retrieve the information and misuse it. The security risk of e-banking also arises from hacking threats and unauthorized access to the bank system. If your account is not secured, may mga hacker na kayang nakawin ang account mo, as usual pati na rin laman nito. May iba't ibang klase ng pag-hack or cybersecurity. Isa dito is malware, the use of unencrypted data, third-party services that are not secured, data that has been manipulated, and spoofing. Some of these, tatawagan pa nila mismo yung tao para kunwari employees siya ng ganitong bangko at need ng password or code na magte-text sa'yo, ipapa-forward sa'yo, pero gagamitin nila yun para buksan nila yung account mo. System, agriculture, and design. In order to manage various operational and security risks of e-banking, it is important that the bank has appropriate system, architecture, and controls in place. Banks always carry the risk of choosing the wrong system design or technology or have inadequate control process. If the bank has outdated system which is not upgradable, then it can turn into an investment loss for the bank along the inefficient service. Banks need to keep updating their system to keep up with the rapidly changing technology to avoid any holes in its security system. Further, the bank's staff requires regular training to keep up with new technologies too. Reputational risk. For any business, its reputation is of critical importance when it comes to electronic banking. If a bank fails to perform critical functions or not work according to the expectation of its customer, then it faces a risk of loss of reputation. This eventually leads to a loss of funding or customers. People are expect that the bank keep their money safe, pero may mga breaches and phishing attack na nangyayari sa bank kaya nasisira ang mga reputasyon nito. Some reason for the risk are the system or product not functioning as expected, significant deficiencies in system, security breaches, external or internal, misinforming customer about the processes and policies of using e-banking, certain communication uses that hinder the customer from accessing his account. So, dapat ini-inform din natin yung mga customer natin na ganito ang policy ng isang bangko, na ganito ang rules ng isang bangko, para sa ganun hindi sila magkakaproblema at hindi sila magtatanong at hindi sila magtataka kung bakit ganito ang nangyari, kung bakit ganito ang proseso ng isang Banco. Legal risk. Whenever there is a violation of laws, regulation, or prescribed practices, or when the legal rights and obligation of any of the parties to a transaction are not established, then there is a legal risk involved. Legal risk is the risk of loss to an institution which is primarily caused by a defective transaction or a claim, including a defense to a claim or a counterclaim being made or some other event occurring which result in a liability for the institution or other loss. For example, a result of the termination of a contract or failing to take appropriate measure to protect asset. For example, is intellectual property owned by institution or change in law. E-banking is relatively new to the industry and there is a lot of uncertainty and ambiguity about certain laws and rules. This increases the legal risk. Money laundering risk. All transactions through the e-banking channel are done remotely. Therefore, it is difficult for a bank to use traditional method to detect and prevent criminal activity. Money laundering risk is the goal of a large number of criminal acts is to generate a profit for the individual or group that carries out the act. Money laundering is the processing of these criminal proceeds to disguise their illegal origin. Example of this is criminal will often buy a piece of real estate using cash from illegal activity and then quickly sell it, depositing the proceeds into a legitimate bank account. They may have a third party buy the property or use shell companies to make the purchase. The greatest risk of money laundering. Businesses that provide services to clients virtually and never actually meet them are at higher risk of being used for money laundering and terrorist financing. This includes remote banking and payment services as well as currency exchanges and real estate transactions where the buyer is not present. While there are certain money laundering rules in place for electronic payments, their feasibility is questionable. Therefore, banks carry the risk of money laundering. Cross-border risk. The core idea of electronic banking is to extend the geographical reach of both banks as well as customers. This means that the expansion can go beyond national borders. This leads to several cross-border risks. One of these is legal and regulatory risk. There is a possibility about uncertainties regarding the legal requirements in certain countries and jurisdiction ambiguities of different national authorities. The second one is operational risk. If the bank uses a service provider located in a different country, then it is difficult to monitor it, causing operational risk. The last one is credit risk. Cross-border transaction can increase credit risk. This is because it is difficult to appraise an application for a loan from a customer in a different country. The next one is the strategic risk. Strategic risk focuses on more than an analysis of the written strategic plan. It focuses on how plans, system, and implementation affect the bank's franchise value. It also incorporates how management analyzes external factors that impact the strategic direction of the company. This risk is associated with issues pertaining to the development of business plan. Second is having sufficient resources available to support the business plan. Third, in case of outsourced activity, the credibility of the vendor. For employees, any change in the work environment, level of technology used in comparison with the available technology. The other risks of e-banking are the same as those of traditional banking like credit risk, liquidity risk, interest rate risk, market risk, etc. However, in e-banking, these risks are magnified due to the use of electronic channels and absence of geographical boundaries. All the risks mentioned above can arise due to some flaws in design, insufficient technology, negligent employees, and unauthorized system access, intentional or not. Therefore, it is important that the bank adopt the right technology and system and have proper access control for a secure transacting environment. Here are some suggestions of different ways to solve the risk of banking. First is keeping security concern in mind. All banks must follow standards. Second, all banks must adopt adequate security measures to maintain the secrecy and confidentiality of data. Further, they must use logical access control to implement it. Third, in order to mitigate the money laundering risk, bank must develop an anti-money laundering technology for reporting and querying. Fourth, bank must have an internal grievance redressal system to adopt a fraud-free control of culture in e-banking. And the last one, all banks must have an explicit security plan along with documents. Further, bank must have strictly ensure physical access control.